you don't need anything, like that market awareness isn't important.
What's your takeaway from the course?
Like, man, that was so worth it.
I can't believe you did that by yourself.
I can't express how tiring it is to talk and teach.
There is a lot of material to cover.
It makes me feel really good to see people start to understand what we're doing.
How do we do for the month? Do we make money? Do we lose money?
I personally want to stay on and answer every question I can.
We're going to talk about the wins and our losses during the month. And finally, we're going to talk about the potential merger between xAI, SpaceX, and Tesla.
I want to know what's going on.
How would you know that MU is not an underlying that you should trade right now?
Everything you really need is...
Welcome back, guys, to the Behind the Trade podcast. Nick and I are going to break down the course that we just had, amazing attendance. We're going to talk about our trading months. We're at the month end. So how do we do for the month? Do we make money? Do we lose money? Spoiler alert, we made money. We're going to talk about the wins and our losses during the month. And finally, we're going to talk about the potential merger between xAI, SpaceX, and Tesla. So Nick, as we kick things off here, we just had the course yesterday. We had the first course that we did together. It was a Saturday course. It went pretty long. We had tons of enthusiasm. What's your takeaway from the course?
I'll tell you, Greg, I'm tired. That was a long course. A lot of great questions that were asked. A lot of great participation from everybody. I'm tired, but at the same time, oddly enough, very energized. I'm just going to speak selfishly here. For me, it makes me feel really good to see people start to understand what we're doing, to see things click for them. And obviously, they're still going to have to go back and, they're going to have to review, they're going to have to study, they're going to have to go and ask Grok or look up YouTube videos, different topics that maybe they weren't clear on. But the beauty is that now they know what questions to ask, right? Where maybe they didn't before. And for other people, they're going to be able to go out on Monday and actually start to look and think about placing trades. So selfishly, it just feels real good to see people learn a new thing. And then also from a friend's perspective, having you here doing this, course for the first time and having Ben continue to help us, it's nice having like your friends and bringing them along, what, once was like, well, here's a crazy idea. And now it's like, well, maybe it's not so crazy if my friends want to do it too, so it's, but I mean, how was it for you? I mean, your first time on the other side of the table.
Well, first of all, I can't believe you did that by yourself the first few times. Okay. There is a lot of material to cover, right? We went through everything from theory to mechanics to our specific strategies. These are some complicated topics we're talking about. We're talking about statistics. We're talking about math. We're talking about concepts that you have to think about in both directions, like, selling a call versus buying a call. You have to be able to think about it in both directions, which is hard to do. And it's hard to do that when you're thinking of the next topic that you need to talk about and people are asking you questions and you have to frame it in your head. The way they ask the question might be different than how you think about that topic. So you have to kind of rephrase their question in your own mind to then answer it. But when we talk about what was my impression, the enthusiasm from everybody that was there kind of struck me. We had several people that there was probably, there was a handful of people or more that were like the kind of core engagement group. Like one guy sticks out in my head. His name is Christian. So we had people from Asia, we had people from Australia, we had some Europeans, 2 people from Portugal, and of course the United States. And Christian he understood, he got the concept so quickly, and he could tell he was paying attention the whole time. He was so invested. He said, I forgot exactly what he said, but he said he was long in the tooth. He was like, it was a lot for him to take in, but you could tell that he was really grasping the material. which was so rewarding.
Yeah, I think he said it was like 2 a.m. or something for him, and we were going long. When you're in a course like that, we want to make sure this is valuable for everybody as possible. And frankly, we want to over deliver on value. And one of the ways that we achieve that is doing our best to answer every question that you all have. And because of that, the course literally ran an extra 4 hours beyond the high end, right? So it was about almost 12 hours that we went nonstop. So he was, hearing him say at the end saying, I'm energized, like it's 2 a.m. for me. Like if I'm good, everyone else can suck it up was kind of, the vibe that I got from him. So I was like, man, like, I love it.
Yeah, I loved it too. And there's probably 3 to 5 moments in the course where people have these light bulb moments of, oh, that's why you guys win 90% of your trades. That's why you're constantly profitable, because of this concept that I had no idea about, that's unique to options if you understand it and how they work, how you layer the advantages that we teach. And we know about those light bulb moments, and we get excited about those when we trade and when we talk about it. And so to teach it to somebody else, and then you see people in the chat going like light bulb, light bulb, light bulb, it's personally really rewarding to see that, and to get the messages after on X, people saying, I'm so excited to start trading. I got a handful, maybe 10 messages from people that were just so stoked to be starting to trade options based on what we taught them. So yeah, I mean, I want to thank everybody out there that took the course, and I know you guys got value out of it. We hear that from you guys, and it's exciting.
Yeah, I couldn't agree more. It's definitely rewarding. The comments and the feedback, I'm going to sound cheesy here, but it definitely nourishes the soul after you get done with a day like yesterday. I mean, I can't express how tiring it is to talk and teach and have to be on and have to make sure you have enough mastery to answer every question that's asked for the entire time, right? It is draining. It takes so much out of you. And then to get those comments and the feedbacks, like honestly, it's like it fills your cup up, not 100% back because you're so exhausted physically, but it gives you that drive to be like, all right, we did this, like we put some good out there into the world. And I know it sounds corny and cheesy, but like it's the truth, if one person yesterday can change their life based on what we taught them, like, man, that was so worth it.
Yeah, I was interested by the audience makeup as well. There was kind of unsurprising that it was all men but one woman. That one woman was very engaged, very active, asked a lot of great questions. You've said this before, and I've heard other people say this as well. Women make great traders.
Yeah. It's true. I have two, I don't really talk about this normally, but I have 2 mentors, coaching students that I meet with, and they are fantastic. They just get the concepts. They have good mastery. And, I have 2 other women that are, starting earlier on their approach to trading and for coaching. And you can just tell there's just something different about the women. The women, for some reason, just have this extra gear of being able to stay mechanical, stay disciplined, that men, for some reason, even you and I, right? Sometimes you do a little bit of extra risk that you don't need, or you play a little bit outside of the lines, and then you learn, get back in the line.
I mean, you're describing the difference between men and women, honestly. Like, women just make better students. They're better at following the book, which is extremely important in what we do. It's a very discipline-oriented endeavor. You need to have risk management techniques. You need to stay within the lines. When you start coloring outside of the lines in trading is when you start losing. And guys, I mean, it's like a running joke, but it's true. guys don't like to look at instruction manuals. We're like, I can put together this chair without looking at the instruction manual, and then you forget a bolt and the chair breaks the first time you sit in it. And then we learn, and then we put in the bolt and we're like, oh, it's fixed. And now next time I can build this chair without an instruction manual because I figured it out by myself. And that's just how we are as men. But it's not beneficial in trading.
Not to go on a tangent here, but just because you brought that up, do you resonate with that? Like cliche? See, I never have. I've never resonated with it because to me, I've always thought like, why would I sit there and stumble around wasting my time to figure this out when the manual can just tell me instruction by instruction, step by step. It's like Legos to me.
Here's an example.
I just want to build the thing and be done.
Here's a kind of a concrete example.
Okay.
Difference between, well, I don't want to speculate on all men or women, but for me, I don't like following a GPS somewhere. I'll look at a map, see where it is, and then I want to get there on my own.
Really?
Why? Because then I know how to get there every time. I don't use a GPS to get to your house. I just drive, unless full self-driving, and then it drives for me. I have to put your house in. But like today, I was driving the Model Y because my fiance has the Cybertruck down south, and it doesn't have full self-driving on it. So I just drove there. I don't put in your address. I just drive straight there. But it's because I have this, I'm going to figure it out, and then I'll know how to do it. Whereas other people may put in an address every time, and they don't know if they're driving north or south or what. They're just following instructions.
See, that's interesting because I'm a hybrid of that. So I'm the type of person, I know this is a tangent to what we have on the agenda, but it's just interesting. Like I'm learning something, I've known you all these years. I'm learning something new about you. I'm the type of person who I like to use the GPS always because it does more than just tell me how to get there. It tells me about traffic, and if you have ways, it tells you about cops, things like that. But I also like it because I want to just get where I want to get to. But when I'm driving there, I'm aware of how I'm getting there. And I just want to get there efficiently. And as I'm doing it, I'm aware. So I know where I'm going. And I always know which way is north or south. I don't know. That's interesting. That's
an example, but it's changed a little bit since having a Tesla because it's so easy just to put in, boop, home. Yeah. And then, it figures out the quickest route for you. So it's changed a little bit over the years. Now that I have a Tesla, I use GPS more because it's easy and convenient. And I'm full self-driving 90% of the time anyway. But anyway, that's enough of a tangent, I guess.
But go back. So being on the teaching side, was there anything that was unexpected for you, or anything that you didn't realize, or anything that was more fun or harder, or just was there anything that was different to not even just be on the teach side, but teaching for that long and the type of questions people ask?
Well, I will say, as a litigator, I take depositions all the time. So I'm kind of used to the length because depositions can go 7 hours on the record, but you're taking a 10-minute break every hour and then a lunch break 30 minutes. So you're probably going 8-9 hours. And over the last 2 years, I've taken a lot of nighttime depositions. So it's even harder to push through that, and you have to be on and listening the whole time. So I'm pretty good at listening to somebody else inputting in a deposition or interview type experience, then responding to those comments or those questions. So I'm good at that. And I over prepared for this course. I was I didn't have the best trading month this month. We're going to talk about it. I mean, I still made 20K. I didn't have a bad trading month at all, but I was so focused on providing as much value as I could during the course that I sacrificed a lot of brain cycles in the trading, which I'm totally fine with. But so yeah, I think what surprised me was honestly how smooth it went. I'm going to admit to you guys, I was freaking out the morning before the course because I was trying to solve this technology issue, and I was trying this laptop and that laptop. I was trying to get the whiteboard to work, and I spent just the whole morning just stressed out about it. And I finally found a solution for very quickly getting the whiteboard up so I could draw on it. So that was very stressful. But then once we started the course that morning, the whole day I thought went very smooth.
Yeah. Yeah. It went well. Yeah. No technology issues, no people signing on issues. Yeah, everything went pretty smoothly. I think it's definitely one of the best courses that we've ran. I mean, you would hope so, right? I think every time I've iterated it, this time I've very much iterated with help from you and my wife, Anna, and Ben, obviously. So it gets better every time. What I like the most about it is, the length of it is going to be what it is, and normally the length of it is really driven based on questions people ask and level of engagement. Not much we can do about that. I personally want to stay on and answer every question I can. I want people to be out of questions before I'm out of answers, or before I'm exhausted. That at least I feel like I did my job at that point. But every time I've given this course, we've added something new. And, I think last time we added Ben's first trade that we went through. People really seem to like that one a lot. We should think about doing more of those. Come to think about it, this time we swapped over how we showed the main quadrant. If you haven't taken the course, you don't know what I'm talking about. But if you have, we went to a whiteboard mode for it. So the iteration, I think, and seeing the evolution of, the material is the material, and the flows hasn't changed, but the iteration, the nuances that we start to get into some of these, I love seeing how it's progressed.
Yeah, we added some buying power slides. That's an important topic. We talked a little bit more. We had added a few wrinkles into volatility. That was something that was new and added. So,
it was great. I can't thank enough, the participation, the people that showed up, the people that were on time, the people who, stuck, throughout the entire thing. It was crazy how many people stayed on with cameras on to the end. And, you and Ben, you guys showed up and, I think delivered extremely well for everybody. And I can't thank you guys enough.
Yeah, thank you. We had one topic during the course that we kind of said two different approaches that we both take.
Are you setting me up for a debate here?
No, I'm not setting up for a debate. The answer is somewhere in the middle, and I wanted to address it on the pod because several people had a question about this, which is when you're placing a trade, is all the information you need to know about the stock on the option chain, or do you need to look at the stock chart? Do you need to have market awareness, and you need to know, I think this came up in the conversation when we were talking about MU, because we were looking at MU as an example, and MU has skyrocketed in the last 3 months. And so somebody asked, how are you aware of, I was like, I wouldn't trade MU right now because the volatility is so high. It's so unpredictable right now. So somebody asked, well, how would you know that MU is not a underlying that you should trade right now? And the answer, I think, is market awareness. But what I wanted to ask you was, do you think you can get everything you need from the option chain, or how important would you say market awareness is of the broader macro environment or each stock that you're considering selling options in?
So it's a great question, and I think it's a subjective question. I don't think there's objectivity to it, and everyone's got to figure out what makes sense for them. During the course, I told people, everything you need is there in the option chain. And more so what that question, how that question came up was talking about technical analysis. And from that perspective, I do think everything you really need is in the option chain. I do think that you can use some things to maybe have a little bit better of an entry. But in general, you and I, for a long time, were very profitable without even looking at anything. So that alone tells me you don't need anything beyond what's in the option chain. But where I don't quite agree with a lot of the what I would call our elders would be people like Tom Sosnoff, who created the Taste Trade platform, Tony Batista, who I had on from Taste Trade as well. These are they were market makers, former market makers. Dr. Jim Schultz, he's another one, right? Went from academia, works at Tasty Trade now, right? He's huge in the option world. In fact, we're going to be grabbing dinner with Dr. Jim soon. They believe that you don't need anything, like that market awareness isn't important. Or I don't want to put too many words in their mouth because I don't want to misquote them. But essentially that, one of the things Tom always says, like, even if you knew something, you wouldn't know what to do, what the outcome would be. And I do kind of agree with that, right? Because we can talk about whenever we went into Venezuela, right? If you knew that was going to happen ahead of time, you probably would have thought the market would go down when the market's open. Market went up. So you never know. But at the same time, where I disagree with them, like that's an example of where they're right. You wouldn't have gotten that right. But if you know that earnings are coming up, I think that's market awareness. I think that matters on what you do. If you know that a company is about to announce a certain product or about to have a certain product release, if you know that there's a rumor of, Tesla, SpaceX-xAI potentially merging, I think that's important news that you should know. So you decide, hey, maybe I don't want to sell this covered call. Maybe I don't want to do XYZ because of the XYZ event. So to me, it's subjective. But for me, I, as you know, really over-index in market awareness. I want to know what's going on. I want to know that they're going to be auctioning off 20-year bonds. I want to know that Japan is about to have interest rate hikes or cuts, right? Because that's what, essentially affects the yen carry trade. I want to know that Jerome Powell is about to speak. I want to know that this week that Trump's going to be announcing the new Fed speaker. I want to know that there's a, armada going out to Iran, a new strike group that's going out to Iran for a potential, attack or not attack, right? Like, I think these things can help you avoid certain black swan moments like we talked about in the course. The last two big ones you could have gotten ahead of. The most recent one that you and I kind of got hurt on that month would be the Liberation Day. We knew that was coming. We talked about it in our group text, and none of us did anything to really protect ourselves. And, it was the most foreshadowed thing in the world. And before that, it was in 2022, or in, I guess, 2021, technically, going into 22, whenever we had interest rate hikes. Now, that one I would say we were kind of ignorant on, right? We didn't know too much. We hadn't gone through a real rate hiking cycle, and no one has since the 80s, the way that was. But we learned from that. And we kind of came up with a opinion that if there's going to be some real change, paradigm shifting way, that's going to some news that's going to affect the economy on the whole or on the global stage, we need to take that serious and maybe kind of pull back a little bit. And we should have learned from 2022 going into Liberation Day, but we didn't. But so I think those things can help you. So that's my answer.
Here's my answer to that. Doing 45-day trades, I think you're right that even if you know that something is going to happen, you don't know what that means for the stock market. You don't know how the market is going to react. But you do know that it's probably going to react.
Yes.
So going into Liberation Day, going into any event that's foreshadowed, you know that there might be a spike in volatility. You know that the market might swing up or swing down. And you can make adjustments to your portfolio going into that. You can choose to put on less trades moving into that. Instead of rolling a trade for a profit, maybe you take off that trade, keep extra buying power in your bank, in your brokerage, and then after the event takes place, or once you kind of see how the market is responding to that event, then you can place that trade. So I would say for a 45-day trade, there's people like you mentioned, our elders like Tom Sosnoff, the Tasty Trade, and the other Tasty Trade guys. They're kind of agnostic to macro events because they don't know how it's going to move the market. But I would say it does give you a little bit of an edge. But beyond that, if you are doing 0-day trades, it is absolutely critical to have a macro perspective, because if there's an FOMC meeting that's going to determine whether interest rates are going to be lowered or not, that's going to have a huge swing that could potentially cause a big intraday swing. Or if there is a bond auction, we had that bond auction fiasco a few months ago where the market, where the market absolutely went nuts. I think it was like it caused like a 2% S&P 500 midday 2% drop in the S&P 500. If you had a 0 day on at that time, you were in some serious trouble. But if you knew that that event was coming up, you probably wouldn't have placed a trade that day. So I've become way more market aware now that SPX trades are a bigger part of my trading strategy. Last year in 2025, S&P 0 day S&P 500 trades were my most profitable trade of the year cumulatively. So I make that a little bit of a priority in my pillars of competence, I like to say, my trading strategies that I like to keep deployed at all times. So I'm much more market aware now than I ever was before.
Yeah. I like the example with the 0 day. Art Laffer, I talked about him briefly yesterday during the course. Art Laffer, if you don't know, he's the guy that Kathy Woods essentially trained underneath. He was part of the Reagan administration. He advises Trump, advised several different presidents, famous for the Laffer curve. Anyways, he has this way of thinking or stress testing ideas where he says, take the idea to the extreme to see if it, holds up to muster. And I like the idea of the 0 day because with the 0 day, that's the extreme, right? So not having market awareness or saying it's irrelevant, taking that to extreme on a 0 day, that shows you that, no, it matters, right? You don't want to be doing a 0 day on Fed Day. You don't want to be doing a 0 day on Liberation Day, right? Like it definitely matters to understand what's going on with the market awareness. So now that is at the extreme where you really have to understand what's going on that day. But with the 45 days, maybe you can get away with being looser, not knowing everything that's going on. I'm also a bit of I'm a weird, I guess. I'm a tech finance junkie. Like I love everything to do with it on my spare time. I'm watching videos from economists, being interviewed. Like I just love it. I don't know why. My brain is just wired that way. If it's not tech, it's finance, and it's just what I'm geeking out on. So that also helps. But to be successful at this, I don't think you have to be as all in as I am, because you're less than me, Junior's less than you.
Well, I think there's another wrinkle to this that's not unique to us, but it is particular to our trading strategies. We tend to trade in tech stocks, whereas depending on your portfolio size sometimes or your interests, you might trade in different types of stocks. For example, we stay away from healthcare stocks. Why do we stay away from healthcare stocks? We've been burned by healthcare stocks before.
You've been burned. I've never touched one.
But it's also because we don't really, it's not that we don't understand healthcare stocks, but it's not in our kind of ethos of trading. It's not in our universe of
I think you're trying to avoid saying pillar of competencies.
No, I wasn't trying to say pillar of competencies, but we are big Tesla investors. Yeah. We use Meta products. We use NVIDIA products. We follow NVIDIA. We are interested in what Palantir does. I'm not interested in what Baycare Health does. You know what I mean? And I don't know. I have no way of knowing if the administration is going to cap Medicare payments like they just announced last week, causing all healthcare stocks to drop 10, 12%. It's not something that I feel comfortable with. Whereas tech, I do feel much more comfortable with, but those tech stocks, they're the leaders of the S&P 500. They tend to be bigger instruments. So you need a little bit of a bigger account to trade those. And so like another example is if you have a smaller account, you might trade stocks that are a little bit cheaper, that are a little bit safer. Maybe you're trading a lot of Walmart and Lululemon and just, so I guess the point that I'm trying to make is it's easy for us to follow what's going on in the market because it aligns with our interests, it aligns with our trading strategies, and it makes sense for us.
Yeah, for me, the reason I avoid healthcare companies is, it's interesting to hear your reasoning because mine's, I guess, a little differently, but we still come to the same conclusion, is because they will announce that they have some drug breakthrough and it'll just happen. It's not like, hey, we've got this big release we're going to make, we got a product unveil, right? Those binary events with tech companies, about them ahead of time. When Apple's doing their WWDC, when South by Southwest is, when Elon's going to have a presentation. So these things ahead of time, but with a company, a pharma company, all of a sudden they say, hey, we got to stage 2 of trials for this thing, and it just drops. It's like, oh, no. So long time ago, I heard some traders talking about avoiding healthcare stocks. So it just always kind of stuck with me.
That's interesting. I would say I just don't know enough about it. Like I know that there's a phase 1 and a phase 2 and I think a phase 3 and you need FDA approval, but I don't know those steps, those processes well. And so I wouldn't know what to do with that information. I wouldn't know whether to not trade if I know that in a week there's going to be a phase 2 trial. I don't even know what I'm saying there. I'm just making I don't understand it. So like Warren Buffett makes a great point of this. He only invests in things that he understands, right? I forgot his analogy, but it's amazing. He's talking about, I think it's like a baseball player, right? He gets 3 strikes and then 4 balls, and then you're out, 3 strikes, and then you're out. And so the reason why their batting percentages are not that high is because they have to swing. They're forced to swing. Whereas we are not forced to swing. We can wait until the underlyings that we like come to us. They're in a position that we like. We can keep a lot of buying power until we're ready to deploy it. Yeah. And that's another layer of how you trade profitably.
Yeah, we don't have a shot clock. Yeah.
We have no shot clock.
But yeah, so I think we kind of have an agreement on that then.
Yeah. So let's move to talking about our months. I know we kind of talked about it last week and we posted our results on X, but let's talk about it a little bit here. Why don't you tell us about your month?
Yeah, so I had a good month. We talked about it last week. I was only up about 10, 11K last week, and that was because I chose to take off I had one real loser, I would call it, which was MU. It was a call strike, naked strike at 400. So I chose to take that off at like 380, way ahead of where I normally would, but I didn't feel comfortable with it. Turned out it was the right move. And then I did some management, like I talked about, to set myself up for February. That got me more comfortable. But this past week was a really good week for me, right? A lot of things panned out for me. My meta leaps paid out really well. I've been telling you guys for 2 months now about Meta, and sure enough, here we are, earnings, and it goes up 10%. So that worked out really well for me. I was able to close out the leaps. That same day that I closed them out, at the end of the day, I sold some calls on Meta because we had such a big move up. And then on Friday, those essentially hit 50% profit right out the gate on Friday. So I was able to close that out. I had some really good Tesla wins on the call side. I sold a lot of cover calls literally in the last minute on Wednesday before earnings. And, not happy that Tesla went down on Thursday, but it did. And I was able to essentially make 50% on those right out the gate. And then I had a couple others. I had Google, a couple other trades that I can't think off the top of my head. But yeah, so I finished out at $37,200 and something in profit for the month. So, I said I was expecting about 15 to 20K a month, but it got juiced up a little bit there. And yeah.
Nice.
Not too bad.
Things panned out well in the last week for you. Yeah.
But that also goes to show, it happened also because I set myself up for that to happen. I didn't get greedy when, I was up 20 grand and I said, okay, I'm going to manage now to get myself set up. I don't want to just like let my ego take over and be like, oh, I'm up 20 grand for the month so far. And instead I said, nah, let's take a step back, get a little more comfortable, readjust, kind of reset the board a bit. And, things panned out well for me. So I would say it's because I was able to take a step back and not be greedy that allowed me for success.
That's such an important thing to do, in my opinion. I love that you talked about how you repositioned some of your underlyings that they weren't in a bad spot, but they could be in a better spot.
Yeah.
And that tends to happen. You have a good opportunity to do that when you are getting close to that 21 days till expiration. You've had that trade on for a while. It's, you could roll it out for more credit and reposition yourself better. I think that's always a smart move to do because it makes you feel more comfortable with your current trades. You're adding credit, you're adding time, you have more opportunities to be right, and it keeps you safe for the month, particularly if you are like we do. We track our profit on a month by month basis. So if you're having a good month and you have an opportunity to reposition a trade by rolling out an expiration, rolling it out a little bit wider, like we taught in the course, it'll set you up not only for success in your current month, but also in the next month as well. So I think it's really smart that you did that.
Thanks. Yeah, it also lets you sleep a little bit. You always know which ones you need to be dealing with when you get up in the morning, whatever, that one trade that you look at to see what's the stock doing the pre-market. Yeah, that's probably the one that you need to be thinking about. What do I do here?
Honestly, when you're at the point where you're nervous overnight about a trade, that means that you should have done something the day before. And we're all guilty of being like, okay, it's near where I would want to manage this or get out of it, but it's not quite there yet. So I'm gonna go to sleep, wake up and see what happens the next morning. The problem with that approach is you don't know if it's going to get worse or it's going to get better. Yeah. And me as a trader, I never want to be I talk about this all the time. I never want to be in a position where it's a 50-50, I'm good, 50-50, I'm in trouble. I don't want to be in that position. I want to manage before I get in that position.
I'll tell you the other thing about my month that I'm proud, maybe that's not the right word, but I'm happy with my performance. It's how I set myself up for success because I had to go to New York and Connecticut for a lunch. So I managed trades to make sure that would be a peaceful trip. Was able to place new trades on, come back, pick up where I left off. So, when you travel, you trade less, right? So you got to factor that in. So I don't know. That's like a little personal victory thing, like a little soft goal was I had a nice smooth trip traveling, stress-free. I could just enjoy the trip, be there for the meeting I was there for. And yeah, I think the balance of it is something that I really appreciated when I got back home.
Yeah. Maybe you learn from my experience traveling abroad and, having internet sometimes, not having internet, we talked about some of the lessons I learned on that trip. Like I wouldn't have rolled as much because then when you roll, you're getting yourself closer to the money. If you're rolling in strikes, not in expirations, you're getting yourself closer to the money. And then there's a higher probability of getting in trouble with that later. So yeah, I think managing your positions before a vacation or before a work trip like that to where you're wide and safe and you can just let the theta decay do its thing is a smart move.
What about you? How'd your month go?
My month was profitable. It was 20 grand.
At the end of the day, that's all that really matters.
That's all that really matters at the end of the day. I was a little bit frustrated with my month, and I posted about this on X, and it wasn't anybody's fault but mine and the universe.
Self-accountability. That's what this
Yes.
podcast is about.
Self-accountability. No, so a few things I would have maybe done different.
Okay.
One of them was for the last several months, I've had cash secured puts on Tesla and I've had covered calls. And I was just making profit on both sides of those as the Tesla stock price just swung a little bit from 420 a share to 470 a share. And I decided to take those off before earnings, which, was probably the right move to do. And in fact, I know it was the right move to do. Volatility was low. Even though we were going to earnings, volatility was low, which is kind of interesting.
IBR was like 12.
Yeah, which is kind of interesting. But I also thought that the earnings call was going to be fantastic. I thought we were going to get a lot of positive news about robo-taxi expansion, about starting to see revenue with robo-taxi and full self-driving, which they did start to report those numbers.
Yeah, I was going to say, well, we did get all that in the deck.
We did get
they
all that.
They just wouldn't, for some reason, they refused to deliver the same good news on the call.
Yeah, I don't know what that was about. But anyway, so I took off those trades and they would have continued to work for me very well. So there was nothing wrong with that, but I just missed.
You feel like you left something on the table.
I left something on the table there. The other thing is, between January 13th and 21st, the market was just trending down. We were in a little bit of a pullback period.
Yeah.
And several trades that I had on.
If only someone could have predicted that.
Yeah. In tech names, I ended up having to close some of those positions on the put side. And if I followed the rules, it was fine that I closed them out. But it was one of those things where it was like, dang, one less day of the market going down, and I would have kept all those positions and just had a beautiful month. So sometimes trading is it's a little bit of luck of the draw, what you're in, and what happens to those particular underlyings. And so some months you luckily don't have to close out any trades and you have a fantastic month. And some months you get like a little bit of, the market moves in one direction a little bit longer than you would hope for, and you have to close out some trades. But, that's just how it goes. But the beautiful thing about trading options, particularly selling options, is even if you had, whether it's a phenomenal month or not as good of a month as you would want, you generally end up still being profitable as long as you're following the rules and you're trading the right way. So
and we can cut this out if you want, but can we talk about your MU trade that you decided to close out and the thought about that? Like how you, like, at what point were you like, yeah, I need to do something about this? Because MU is a situation I think a lot of people are going to get into where you're going to see a stock that's just like a juggernaut, right? Like, I can't think of another one other than MicroStrategy back in 2024, but those are ones where it's like you got to pull trigger earlier rather than, you know what I mean?
Yeah. So yeah, I had MU on, I had a strangle on it. So I had both sides, the call and the put on, and it just ripped. It just skyrocketed.
Now, when he says rip, what we're talking about every day, it's moving not like a little bit. 5%, 10%, 5%, 10%, 10%, 10%. Things just moving.
That's right. And so I ended up closing out when our rules hit, and whatever, lost a few grand there. Not too big of a deal, but I probably would have been better off recognizing that it was ripping and closing out a day earlier, and I would have saved a little bit of money. And I think the key takeaway there is, and this goes back to market awareness, if a stock is moving sharply in one direction, and you can see that in the chart, it was blatantly obvious with MU, just get out. It's not worth the risk. We trade small and we trade often. And that means you've got a bunch of underlyings on with small positions on each. And that one position is not worth fighting for when you could get out at a little bit of a smaller loss than if you were to take it all the way to your exit criteria. And recognizing that there is something going on with that underlying that you just don't want to be in it. And the other thing that I would say on that is I never recommend people, to use a poker analogy, to throw good money after bad. And what I mean by that is if you do find yourself in the position where you're in an underlying and it moves sharply against you, you accidentally go through earnings, say for example, and it like Meta, if you had a Meta short call on and it ripped up, I don't like to then what we call buy the guts and sell the wings, which means to buy your existing positions that are now close to the money and sell them further out of the money. I don't like to do that in an underlying that's causing me a lot of trouble that I'm seeing rip up, or it goes through earnings and it's a big surprise, because there's so many other underlyings that you could put that money towards. You could recycle that money to something else, and you don't have the emotional baggage of, oh, I just got burned on this underlying. And two, it's already demonstrated that it's moving aggressively. So why do you want to take the chance of it continuing to move aggressively? And that just doesn't make any sense to me. Just take that money, recycle it into another trade that is going to pay out the same amount and has a little bit less volatility. It's kind of more in your sweet spot than something that's just been ripping.
Yeah, I agree. And I like what you said there about buying the guts and selling the wings. Yeah, I think that's more relevant on something that's just behaving normal and maybe works a little bit against you. But when it comes to the MU, what I noticed was, for me, right, I had a strike on the call side at 400. Yours is at 420. And we were challenging my 400. And whenever we came back down to like 388, I saw an opportunity, like, you know what? This just does not feel right. This thing feels like a juggernaut. And so I got out of it. And then same thing happened to you, where it got close to 420, but it didn't hit it. And then it went back down to like 407 or something, 414, something like that. And it was like bouncing around there. And then went back down, I think even down to like 390. And then it got back into that 400 range. And then you kind of had the same feeling like, all right, we gotta get rid of this. And what I found interesting was listening when you get uncomfortable like that tells you everything you need to know. Because if I would have waited a little longer, my strike was 400. I would have been in his range of that 400 to 420 range. If you would have waited a little longer, you would have been stuck in that 440 to 450 range, right? So I think there's something to be said with when you feel uncomfortable, you got to do something. Don't just sit there and feel uncomfortable. Now, what does that mean? Like, there's degrees to it. We're, I think, pretty experienced at this point, where uncomfortable to us means something different than maybe someone who's just starting out. Someone who's just starting out, maybe they get a little extra emotional because they're new to it. But over time, you're going to have that regulated, where you're going to know what normal looks like, and you're going to know what not normal looks like. And I think you and I did a very good job of recognizing what not normal looks like. Now, could we have recognized that a little earlier? Sure, we could have. But we recognized it before it became a problem.
That's a good point. You reminded me, it also violated one of the personal rules I have for myself when trading options. It's not something that we have talked about and considered a rule in trading. But sometimes when you're defending a position, in this case, my call was starting to get challenged and I was rolling up those puts. And when you manage like that, which is what you should do, absolutely. But when you manage like that, sometimes your position sizing can swell. And what I mean by that is not the number of contracts you have on, but as I'm rolling up those puts, it got to a point, I think I rolled it up to about a 30 delta, and I had collected $7,000 in premium on those puts. Now, what happens if that starts moving down against me in the other direction?
Uh-oh.
Well, now I have $7,000 in premium on the put side. And so if I then say it starts to roll, the stock price starts receding, which is very possible when a stock is ripping, right? That it could have a pullback. I don't want to be in a position where I'm defending against contracts that are worth $7,000 because I could get myself in even more trouble. So I think when I realized, okay, now I'm losing on the call side and I'm winning on the put side, but my put side has so much premium in it. I'm like, you know what? I don't want to do this. I'll take it off and I'll recycle that money to somewhere else. I'll reset it to my normal comfort zone of collecting about $1,500 in premium on each side, something like that, with my account size, $2,000 premium on each side. But I don't want to be sitting there with $7,000 in premium on the put side because the position sizing is larger than I like my position sizing to be at.
And just to kind of reset, because I know we're talking a lot about like problems and losers and stuff like that. The point is just to be transparent with everybody, all right? Because we can sit here and talk about winners all day long. I only had 2 real losers this month. That's it. It was that one MU and our very first trade of the month with a 0 day. Every other quote unquote loser I had was me just managing the trade or rolling something, like wasn't like a legit loser. But even if you counted all those, I had 5 total, right? So it's including my intended management ones. So, and when I say that, just to be very crystal clear, what it means is I rolled them so I could collect even more money. So I took a short-term loss, like a couple $100, so that I could get that extra premium. And those were all on Tesla, which already paid out. But anyways, so we're just trying to we want to make sure we're not just always talking about like, oh, look how great everything was. Like, yeah, he made, how much did you make? 21,000. I made 37,000. Ben had a nice month on a small account too. He only used 9,000 buying power, but he made $1,000 on that. Right, great returns on 9,000. But so we could easily just talk about how good everything went, but we want to be transparent and honest and talk about the uncomfortable parts when these trades come up, because they'll come up, but in reality, the vast majority of the time, there's nothing going on. They're pretty easy.
Well, there's also almost nothing to talk about the winners. The winners, you put on a Tesla strangle, you rolled both sides, you collected the premium, you made money, and then that's it. You didn't learn anything. You didn't have to do anything interesting. There's really not much to talk about. The only thing that is worth talking about are the losers. So yeah, we win like 90% of the trades that we place, and we have monthly. I think last month I was at a $65,000 month. The month before that was like a $30-something thousand month. Like the last 6 months have just been insane profit. So, but that's not interesting. That's not informative for anybody to listen to. So yeah, we talk about our losers so that you guys can learn. So you can learn how we're managing them. And it's part of the process of trading. If anybody's telling you they're winning 100% of their trades, they're just full of it.
Run away.
Or if they're telling you they're making 25% of their net liquidity and profit a month, they're either just YOLOing and they're having massive losses some months, and then the month that they're making a 25% profit, they're blasting it out to everybody. It's not realistic. So yeah, that's the way we learn here.
Yeah, just want to make sure we don't scare anybody away. So we're just being overly transparent.
Yeah, and we're talking about bigger numbers than.
The numbers we're talking about is against 7-figure portfolios. So that's not like
That's right.
It's don't think that that's going to have to be the type of losses you take or you have to deal with, right? Like it's all relative based on sizing.
Yeah, that's right. And so what else happened last week? We got a teaser, didn't we? We got a teaser that, not in trading, but we got a teaser that, so after earnings, we had a great earnings deck, and then the stock price
didn't like it.
They
didn't like the conference call.
But the day after we woke up, we're like, oh, Tesla's up 5%. Why is it up 5%? Well, the rumor mills were swirling, and allegedly it seems like from some pretty reputable people are suggesting that Tesla may be merging with SpaceX and xAI. Why am I blanking on? xAI, yeah.
xAI.
xAI. I don't know. I was just like, that was the wrong, that was the wrong name. No, it's not. Do you think it's going to happen, Nick?
All right. So if you would have asked me this Friday morning, I was on with Herbert and Hans. I said, no, I don't think so. I think this is just hype being built for the SpaceX IPO. I could see SpaceX and xAI maybe merging. They're both private companies, sure. But Tesla and SpaceX, I don't know. That just seems so unlikely to me. And then I watched the recent All In podcast, and the way Jason and Chamath talked about it was as if like, yeah, it's happening. It's a done deal.
Yeah, they said like, yeah, it's happening. And then they kind of backtracked and be like, oh, we don't know anything though. We don't know anything.
Yeah.
And I was like...
The way they said it was like, wink, wink, it's happening.
Yeah, their initial reaction was very strong, and they backtracked.
Yeah, so I posted on X, like you know, I got no life. I just got Greg on this podcast and then trading and my wife and my son. So, you know, as soon as the pod came out, I was able to watch it. So I'm sitting there on the couch watching it at night. And, you know, I heard them and saw how they conveyed the information. And I posted on X like, oh, shit, it's happening. Like, it's like, they would obviously know. They're probably going to be investors in it. Like, do you not, like, I don't know. Like, now I think it's going to happen. The part that was confusing to me that I expressed with Herbert's on with Herbert and Hans, that I couldn't really understand, although I can steel man it, but I couldn't understand is if they're all going to merge, well, why would Tesla have invested $2 billion into xAI if they're all going to merge anyways? Like, that seems, that didn't make sense. My steel man to that would be that investment has been in the works for a while, and they're not going to sit there when they just decided, okay, in the last couple of months, you know, we should try to merge all these together. If that's already been in the works, like, you don't go back, like, all right, stop everything, because we started this last year to get, you know, because we voted on it, right, for in the shareholder meeting. So if it's already been in the works, you're not going to stop that investment to xAI just because now in January, February, you decided, hey, you know what, we're going to try to merge all these under one umbrella.
You know, the other thing it might do is by Tesla investing, I think it's $2 billion in xAI, they are establishing the market value of xAI, a recent market value, which then the xAI board can use to justify a valuation for a merger into Tesla.
Maybe, but that, you can do that with any rounds, right? You can.
But I'm saying this is a very recent round. It's like immediately before the announcement. Maybe. I'm speaking out of school. I have no idea.
Yeah, I mean, xAI right now is, you know, after last raise, I think is around $250 billion in market cap. So it's not like the 2 billion's even like meaningful. But yeah, I don't know. I tend to think it was just something already in the works.
Yeah.
And, you know, it's kind of like, you know, if you ordered, I don't know, maybe you order something already, it's on its way, and you decided, oh, you know what? We actually want to go and hang out with our friends who we just saw, we haven't seen them forever. Hey, just wrap it up, put it in the bag, we're going to take it. Like, you're not going to tell them, hey, don't cook it. Like, it's already, it's been made. It's already coming out. Like, it's a waste of time to go and stop that.
Yeah, exactly. The other part that I'm curious about as an investor is if a public company like Tesla absorbs two private companies whose valuations are not established by an open public market, but instead valued based on private investments that may not be exactly tied to, you know, the revenue may not be justifying just yet their valuations. And you can say the same thing with Tesla as a public company, but at least it's publicly traded. What does that look like once the merger takes place? how is that going to affect the valuation of Tesla compared to its revenue after the merger, right? I know it's already a growth company, and PD ratio is not a great way to measure the valuation of a publicly traded company that's a growth company. But it just adds these wrinkles in there that, as an investor, I don't know if investors, like institutional investors, are going to love the fact that they're all under one umbrella now, and they're going to give the stock price a multiple because of it, or if they're going to say, dang, now the valuation is way up here, but our revenue is a smaller percentage of that because of the merger.
Yeah. So let's just talk about how this would work. So the way it would work is you'd have to create what's called a new cap table. And that new cap table would essentially be the entity that creates the merger between Tesla, SpaceX, and xAI. And so they each would have their own weighting, right? So that would create essentially a brand new company, a brand new stock ticker. So you call it Elon, right? So if you have new ticker, Elon, new company, Elon, now all those are part of it, in my opinion. And keep in mind, SpaceX, they make a lot of revenue. It's not like they don't. Like they're a profitable entity. And call SpaceX right now at about 1.4 trillion valuation. That's what, at least Polymarket is estimating that they would IPO for. Tesla saying about 1.3 trillion, xAI at about 250 billion, right? You combine all those, I do think that it doesn't really matter, again, PE or anything like that, or even PEG ratios. I don't think that matters, because if anything, the synergies and the lack of friction helps even more. Because right now, when Tesla, our vehicles, use Grok inside of them, Tesla has to be paying xAI a fair price for that technology. And there's a lot of, they've got to make sure they keep that very clean, all right? Tesla and SpaceX share a materials engineering team, and they have to keep that very clean, right? You can't just have people working for free, right? You've got to have an exchange of money for people doing it from one company to another. And so there's this constant revolving door of Musk companies working with each other that creates complications. There were threats for lawsuits against Tesla because Elon was using Tesla engineers to go, when they acquired Twitter, to sit side by side with the developers at Twitter to make sure they weren't doing anything funny, right? And to inspect code, right? And that created a whole mess because, how are we paying for these? And he's like, these people are volunteering. It just makes it messy. So by them coming under one umbrella, becoming one entity, all of a sudden you don't have all that red tape, all those points of friction. You can just allow all these different companies to work smoothly, right? If you think about it, xAI will essentially create the reasoning part of the brain for Optimus, whereas Tesla is mainly working on the part of the brain for biomechanics and how to pick things up, right? But not necessarily the reasoning part or the empathy part of the brain. And at the same time, like I mentioned, the materials engineering part of the things. And on top of that, when it comes to data centers, right? SpaceX is, Elon's talking about putting data centers up in space. Well, we need energy for that. We need solar. That's Tesla. So you can see how all these just they overlap. And so I think for that reason, that would unlock even more growth potential for that new entity, because now the synergies are there. It's like you're taking these different puzzle pieces and you're putting them together, and all of a sudden now you have something beautiful, something that's more valuable than when they're all separate and apart.
Yeah. Yeah. I mean, you make a good point. I guess maybe we'll see in the next few weeks if this comes to,
just thinking about another way to think about it, imagine we have this mic and this cable, this arm, our computers, and they're all separate. They're not as valuable. You connect them all together, and 1 + 1 + 1 = 5.
You could analogize it to the Apple ecosystem.
But, it's a good, it's a good one too.
But I guess we'll see in the next few weeks whether the merger takes place. Hopefully it's great for us as shareholders. As we wrap up here, I think we got to run, but remember to subscribe and give us a like here. If you took the course yesterday with us and you're listening to this podcast, drop us a comment on what you thought of the course, whether you enjoyed it, and any topics that you feel like we could cover on this podcast next week for you guys, so you guys can continue to learn.
Yeah, and I guess one other thing, February 22nd, we are having the last options crash course that we're going to be doing at least until, I don't know, late spring, early summer. Greg and Nick need a break, and we're also trying to do our finish up our 0-day course that we're going to offer in March. If you're interested in that, DM us. We have a wait list for that growing, but February 22nd is going to be the last one that we do for a while. That option crash course is pretty much a prerequisite for the 0 days. So again, the 0 day, we're aiming for end of March. I'm hoping, looking at Greg, make sure he doesn't have any trips. So we're planning for end of March for the 0 day course. And like I said, prerequisite for that will be this options crash course. We just need to make sure that everyone's on the same playing field so that we can actually spend more time on substance rather than bringing everyone up to the same playing field.
That's right. Cheers, everyone. Have a great week.
Bye.